the thing that's so difficult to grasp about Bitcoin as a digital transformation is it's a complete paradigm shift in your view of money, property, and energy. And you know, when you have something which totally transforms your world, it takes a while to give up the old world. So just about every company on earth has a balance sheet, and every a conventional family, a conventional company, a conservatively run organization runs on a balance sheet of cash and credit. Most central banks have cash and credit. A long time ago, people had some gold on their balance sheet, but gold, it probably peaked 1914 and it disappeared. And then what you saw was companies running treasuries with cash and a lot of credit, and the credit is short-term sovereign debt or other high, AAA rated credit instruments. And the way you ran a business was you're either a finance company, a Wall Street company, and you can't really invest in cash. Maybe you invest in credit, fixed income. You're either credit or you invest in equity. And then if you're an operating company, like a software company, you hold your treasury in cash and short dated sovereign debt. And that's just the way it was for 30, 40 years.
And you were doing that for nearly 30 years yourself within MicroStrategy.
That's how we ran our company. But through the decade from 2010 to 2020, it got harder and harder for us to grow the company. And we were generating a lot of cash, but somehow the stock got mired. And if you have a bunch of cash and it's generating 5% interest, and someone told you the inflation rate was 2%, you might think that sort of you're getting ahead. But when interest rates went to 0%, I think the first shoe to drop was interest rates are zero, or that's not good. The second knock was they're going to stay at zero for 4 years. Okay, there's no hope of generating interest on cash and credit. Well, that caused me to stop and say, well, how bad is it? Okay, well, how bad is it depends upon your definition of inflation. So I believe there's two inflation rates. There's an inflation rate if you want to be poor, or there's an inflation rate if you want to be rich. And the inflation rate if you want to be poor is the CPI or PCE. It's like a market basket of goods and services that don't include the highly volatile energy and food, and they don't include housing, and they don't include college education, and they don't include stocks and bonds and early retirement and things like and art. So that inflation rate is preached so often that I think the entire population just kind of internalized it and says, okay, I guess inflation is less than 2%. Interest is 0%. I got a negative real yield of minus 2%. I have 35 years. I lose half my money. Well, I mean, if you believe that, then of course it's a bad thing, but it's not a horrific thing. But I think sometime after the interest rates pegged at zero, I started thinking about inflation. And I saw inflation from the point of view of a CEO. If half your market cap was cash and you went to an investor, the investor would have said, hey, look, we got 25% return last year on the S&P 500. You're getting 0% return. That's a 25% cost to capital. You're burning, if you have $1 billion, you're burning $250 million in 12 months. You're burning $20 million a month. Okay, so give it back to us. So the institutional investor would say to the CEO, you're irresponsible to hold a balance sheet of cash and credit. Give us the money back. Okay, so now you're caught between a rock and a hard place. You're either going to give the money back and be decapitalized, or you have to invest it in something that's going to go up 24% a year. Now, and that takes you down this rabbit hole. It turns out if you're an operating company and you want to invest in something that's going to go up 24% a year, you buy a package of securities, you run into the SEC 40 Act. And the SEC 40 Act caps you out at 40% of your assets. So if you had $1 billion in assets, you couldn't hold more than $400 million worth of S&P indexes or companies. Okay, so what do you do with the other $600 million?